Yes, good afternoon and welcome to the fifth edition of Steelman's Engage, an interactive webinar series that facilitates intensive discussion on the evolving dynamics of the steel and steelmaking raw materials industries, with in-depth focus on the forces reshaping the industry globally. Our focus is to unlock the futuristic trends in the global and domestic steel industries and extend our gaze beyond the immediate and the obvious. This session is on India's iron ore and pellet exports, with the dominant theme being India's iron ore and pellet exports surge in H1FY24, what to expect in the near term. As per Steelman data, India's exports of iron ore and iron pellets have soared in H1 of the current fiscal compared with the same period of last fiscal. This has been largely due to the revocation of export duties imported imposed last year, steady growth in domestic production of steelmaking raw materials, rising global iron ore prices, and higher exports by miners, both due to production ramp up post grant of new ECs, as well as removal of restrictions on exports in certain states. To discuss these issues in greater detail, we are pleased to welcome our eminent panelists today. The first expert on the panel is Mr. Shobit Bagadia, Director, Bagadia Brothers. Then comes Mr. Abhishek Agarwal, Director, Godavari Power and Ispat Limited. And last but not the least, Mr. Rajesh Gupta, Director, Lloyds Metals and Energy. Welcome to all of you. Now, to flag off proceedings, I would like to request my colleague, Mr. Indranath Jha, to deliver his presentation on the overall scenario. Over to you, Indranath.
Thank you, Nirmalya. Good afternoon, everyone. Hi, I'm here to brief you about the Indian iron ore and pellet export scenario briefly. And before beginning my presentation, let me brief about the steel mint with over 600 price assessment and the 500 over 500 data assessment as per the steel mint, as steel mint has emerged leading market intelligence firm in iron ore and steel sector. Begin with the first slide. India's iron ore and pellet export have increased nearly threefold to 26 million ton in the first 8 months of this financial year, against around 10 million ton in the same period of last fiscal FY23, as per the steel mint data. While iron ore export were recorded 20 million ton out of the 26 million ton recorded, and the 6 million ton pellet exports. Export duty impact in H1FY23, rise in domestic production, higher exports from Karnataka and Maharashtra, and hike in global prices were the key reason behind hike in export volumes in this financial year. China continued to be the largest iron ore importer at 25 million ton, followed by Malaysia and Indonesia. Now let's have a look at the company-wise export chart. Vedanta, as you see on your screen, Rungta Mines, Prafulla Enterprises, and JSW were the top exporter for iron ore fines and lumps. However, in case of pellet exports, Rungta, KIOCL, BRPL, and AMNS India topped the charts. Let's talk about the iron ore price trend. In steel mint, India low-grade iron ore fines Fe57 export index up sharply at around $12 month on month and rose to 2.5 years high in November 2023. To sum up all this, we are expecting, or you can say, we are expecting at around India iron ore and pellet export for this financial at around 35 to 40 million ton, a sharp rise from 21 million ton seen in FY23. That's all from my part for this iron ore and pellet export scenario. Over to you, Nirmalya.
Yes, thank you, Indranath, for your insights. We would now like to proceed with the much awaited panel discussion with the experts. And I request you to please carry forward with the questions.
Thank you, Nirmalya. My first question will be with to Abhishek sir. Uh, as per our estimates, India pellet production likely to increase by 5%, around 88 million ton in FY24, of course. So my question is, how do you see it's impacting the domestic consumption and exports?
First of all, a very good morning to all. This year, as per your data, the pellet production will be up to 88. And with the China, on the surge, and we all know India has oversupply of pellets as well as, the low-grade fine, which is not being consumed in the country. So everybody's on the lookout of export opportunity. So essentially, the surge is mainly into that reason. And I believe the data coming in, China's prices should be bound. So we can look at good numbers going forward as well.
Yeah. Thank you, sir. My next question will be to Shobit, sir. So India iron ore fines and lumps export have risen exponentially. As you see, around 7 million ton in CY22 to 28 million ton in till November to January 23. From which all regions are we seeing that the increment in export this year?
Good afternoon to everybody. I think the prominent regions for export are still dominated by Odisha, but we can see a substantial increase from the state as well as from Karnataka because of course, lifting up of the restrictions. But I don't think a lot of good volume is going up from Karnataka, but still something is coming up from there, so that is a good thing. But no doubt, Odisha is leading the way.
Okay. My next question to Rajesh sir. Lloyd's recorded the iron ore production, 5.7 million ton in first half of FY24. A sharp rise at around, against the 1.5 million ton last year. What is your guidance for the iron ore production and export this fiscal, sir?
Rajesh sir, I'm sorry to interrupt, but you are muted. Kindly unmute yourself.
Sorry. Good morning, everyone. Thank you, Steven, for inviting me to this seminar. This year, we should achieve around 10 million tons production dispatch from our mines in Surjagarh. This would complete the current EC levels that we have, and we are already on target for that. And number one. Number two, on exports, we have done around 500,000 tons, maybe 100,000 tons, 120,000 tons more we'll be exporting in this financial year. And as well, around 6% of our production will be exported. Balance is all in the local market.
My next question to Abhishek sir only. How do you see the market evolving, sir, for DR grade pellets globally?
I think, with all this noise of green steel, which is already starting in India, and of course, outside, if you see the West, they've already started investing in that in, big amount of money. So, blast furnace is probably something which is now extinct for, those guys. So, the new route of steel making, of course, is, the midway is gas-based DRI. So, Middle East is a big hub, and a lot of capacity being added up, by the companies, be it Japanese, be it Fest, even JSPL is expanding. So I feel the premium difference between the blast furnace pellets and the DR pellets going to spread. If you see, it was used to be around $6-7. It's already on $12. Talk about Vale's index. So I think going forward, demand of gas-based pellet DR pellets will be it will be on an increasing trend, and that go at a very fast pace. Thank you.
Yes, sir. So just before Indranath asks a question, I'll just, to Abhishek sir, to continue on the theme of DR grade pellets. So in India, sir, where do you see the production of DR grade pellets going? Because there has been a lack of availability of high grade iron ore, and with depletion of resources also, that is a big concern. So domestic production of DR grade pellets, what is the outlook on that?
See, to be very honest, with the kind of iron ore I have and what knowledge I have, you need best of iron ore to make DR. So, Vale specs is very clear. It is 67 plus pellets and, 0.2, 0.3 alumina. So to achieve that, I think technically it's possible, but then commercially, I have a big question mark. Because as you rightly said, the sources are being depleted. The average grade in any mines is on the lower side, so we have to beneficate. And beneficating with additional cost, it's not an easy to design the right plant. What Vale does is, he has an iron ore mine which is pure 70-71. So for him, it's like just mining and then making pellets. But for people in India, because of the grade, it's a challenge. It's possible, but then of course, commercial side will always be a question. But people can always, for example, JSPL, he has a gas-based plant in Angul. So, they achieve a certain quality where they, realize that, this is ideally suited to our operations in terms of our capacities and our available sources. So people start doing that accordingly. Then, they adjust. But to match quality required in Middle East, for Indian people, it's very, very difficult. It's possible, but difficult.
Yes, sir. Yes, Indra.
Yeah, thank you. My next question to Sobit sir. You were talking about the Karnataka and Karnataka exports has increased. So my question is, what are the challenges of Karnataka to export iron ore? I mean, what kind of challenges you are facing?
Basically, by increase, I mean that since they already started a year back, so of course there will be an increase, but not to a very great volume. Basically, there are a lot of challenges which we have to face over there right now. First of all, the mining department is not issuing the trader licenses, trader exporters licenses very easily. Still now, they have only issued it to the miners or to those who are having even the beneficiation plants. They have withhold the licenses for the trader exporters till now. Secondly, the prices in the domestic market and the auctions are also going a bit high, which sometimes make it unsuitable to procure the cargo in Karnataka because we need to have at least 50,000 tons at once to export it, and it takes a lot of time sometimes to gather such kind of quantity at once. Secondly, I think they are ramping up the production, but since I think the last so many years, Karnataka was in an isolation, so that is why they never increased their capacity to the level to meet the export demands. They were only meeting the demands of the domestic market. So now they are ramping up the production, and that is what it is taking time for them to do that. So I think in the near future we may see a lot of volume coming up, but not today. Yeah.
And how long it will take, I mean, for the license and all? I mean,
there is no clarity. There is no clarity from the department. We have been pursuing the departments a lot, but there is some hesitance at the part of the mining department, as well as there is a mental blockade which we feel the sellers are having. Because of their past experiences, the export market, and the following regulatory nuances which they had to face.
Mm-hmm. So it's already been 1 year. I mean, more than 1 year, right? So, so it's an obvious question: how long it will take to resolve this issue?
That would be best suited. That would be best answered by the departments and the mine owners.
Okay. So the next question to you also. I mean, has increase in export impacted the domestic availability of iron ore, especially high grade in eastern and southern India?
No, actually, it's the other way around. The export which usually happens is usually of the below 58 grade. The high grade, I don't think a lot of high grade goes for exports until unless they are being carried out by the miners itself, if it suits them. Secondly, the high grade prices also, for example, in Odisha, they have been much more viable for the domestic market as compared to the export market. So, in fact, I would go the other way around. In the last 1 year, we have been facing a bit of issues in the availability of the below 58 cargo as well. That is not very easy now to get cargo in big volumes as it was earlier, because what we understand is that the domestic market has also now started using the 57, 58 grade as well. So now that has got into the competition.
So blending with the high grade of low grade ore, it's also making any, availability issues in Odisha?
I'm sorry, I lost your
I
voice.
mean, doing the exports of 57 grade,
Mhm.
the blending with the high grade and then making the 57 fines.
Mhm.
Is
Mhm.
this also, making the Odisha iron ore grade
Yeah, of
availability
course,
issues?
of course, of course, of course. That is one of the factors.
Okay. Any comments, sir? Abhishek, sir, any comment on this?
No, so I'm not very much aware about the Karnataka situation, but yeah, what Shobha just mentioned, I totally agree. The usage of 57, 56 fines has increased domestically, because everybody wants to, lower their input cost. So, of course, the best way to is to blend it. So, by high grade, by low grade, average the cost. So, it's very much possible, and it's good if it's happening, rather than exporting it, if they're able to use it domestically, it's good for India. It's good for the industry.
So any comment on the Odisha iron ore fines, sir? Related to this, if you relate this issues with the Odisha iron ore fines. So any comment on that?
See, I think Odisha, I think the entire cycle is shifted to probably OMC now. I feel he's leading the way. When his policy is very clear: do auction once a month, revise prices to a certain limit based on the demand and supply. And basis OMC now, other people sell, and of course with all Odisha miners, moving towards making steel. Be it Ambalka, for example, is Atha, then Omta Rungta, is expanding in a big way. So eventually all the big miners are, moving towards steel. So going forward, it will be a challenge, the ability of finding some research for the merchant player doesn't have, the macro indication of fines. So consumption of 50 say, rather I would say benefication should start, and probably they start benefiting 50 also now. That's the only way going forward to, meet this demand and supply gap.
Okay. Thank you, sir. Sir, it was earlier that the China Mineral Resources Group to consolidate with the Beijing to purchase iron ore and negotiating with the world's leading miners. So is there any update on this, sir? Do you see it's impacting the Indian exports?
No, I don't.
Okay.
Yeah, so whom are you asking? Sorry.
No, sir. Go ahead, sir.
Shobhit, please go ahead.
Okay. Yeah. No, I think we haven't heard much about it. Although there was a lot of buzz about it, but there's not much happening on the ground as such. Even if it does, we'll have to see what are the policies on which they are doing that. And based on the policy, if let us say, even if they are able to achieve this mammoth task to negotiate with the big miners, along with all the other buyers, it might create a bit hurdles for the Indian exporters, because as compared to other peers like Australia or Brazil, the volumes by India are very small in front of them. So we might have a bit of less bargaining power with them at that point of time. But it is too early to say, because nothing as such is still on the ground.
Yes,
Nirmalya, over to you.
Yes. So just to get Rajesh sir also into the discussion. So now that we are in China, so let's continue with China for some time, because of course the China is the biggest consumer of iron ore globally. So sir, how do you see China's appetite for low grade ore, going forward? So of course that will depend to an extent on steel margins, which were contracting, but now maybe increasing a little bit in November and December. So in the new year, how do you see China's appetite for low grade ore?
So I think the appetite of ore is based on the production of steel. And China always, every 3 years, 4 years, they talk about reduction of production for various reasons, whether it is Olympics or whether it is pollution, and now it is whether it is greening. But after that little bit talk, the production starts going up again. And I think this is what is happening this year also, that production has started going up, and again the demand of iron has come up. So what they essentially do is reduce the stocks in the ports, which has happened now. And therefore, all of a sudden, there's a big surge of ships going in, and ship freights have gone up, and damage in or ship waiting time in China has gone up. So I'm hopeful. I'm not hopeful. I mean, I'm clear that they would continue their intake of steel. Maybe not to the extent of increase that they were doing earlier, but I don't see a major reduction of steel production, and therefore I don't see a major reduction of demand of iron ore. They are also producing iron ore, and that's not going anywhere up very soon because it's very low grade. When we say low grade, we say 57 for them. 57 is high grade because they are beneficiating a lot of it from 35 to 65, 66. So definitely that production is not going up. So definitely I think the international demand of China is not going to, go down by 10%, 15%, something like that. It's going to be that plus minus range. Whatever is happening will continue. The effect of pricing at various times reduces or changes the premiums on various grades. So right now, because the steel market is under pressure in terms of pricing, so lower grade is more fashionable in China because they can use that to blend their stocks of higher grade. Same thing goes for pellets. Therefore, the premium of pellets is a little lower. And I think this concept will be premium is lower, not pricing is not lower because the iron ore price index went up. So that kind of cycle will keep on happening, and I think China would remain a leader in the market of deciding the pricing over a period.
Yes, sir. And to coming to Shobit sir now, sir, your take, because we also wanted your take on, I'll come to Abhishek sir with this question too. What is your take on China's demand for pellets going forward? So how do you see China's pellet demand evolving? And of course, the outlook on imports of Indian pellets by China.
You see, if I see today's scenario, usually the months of November, December, or January are considered to be a good market for pellets. But as we all know, in fact the premiums have been coming down from $11-12. We are today somewhere around $8.80 or $9. In that also, there's not a lot of liquidity for pellets, at least even at the ports or at the seaborne market. It's very slow. In fact, the lumps is doing better than pellets, to be honest. I think the reason could be first the prices of the coal. The second could be the margins are very thin right now. As I was studying, I think last week as well, right now as well, the margins are not very good for the mills. That is why they're struggling on it, and they are shying away from pellets to be used a lot about it. Thirdly, we all were expecting some kind of restrictions on the productions due to the environmental scenario over there during these months, but still they haven't come yet in a good way. So that is also hampering the demand of pellets, we assume.
Yes. So Abhishek sir, I mean margins are not that great currently. So of course premiums for pellets are going down. But what is the outlook you see going forward? Maybe in the first quarter of next year. So what are the chances now that steel production momentum has been quite strong, and there has been no reduction in production as such? So what do you?
I would say so. I think there are 2-3 factors which are contributing. See, first is you also need to understand both Vale and BHP has announced a revision in their production, which is almost 5% lower than what they envisaged at starting of the year. That's also playing the news. Secondly is, as you know, the China's property market has totally collapsed, and with all the stimulus coming in time to time, government is trying to revive the economy. So cutting on the steel production again, would be on the wrong side. So I think that's the reason, they haven't restricted the steel production during the peak winter months, which they used to do earlier. So all the 3 factors will, and I think so for the India, see, as long as the price is something, it's a commodity, right? It went up from 100 to 135, 930 levels, might be 120, 125 again, 110 also. But as long as Indian domestic producers are getting a ration which is close to probably domestic or even little less, but they're able to, move up the cargo. I think they will continue to export because there is a oversupply of pellets in India, definitely. And with current steel market being subdued, with practically no demand, but as long as the prices are low, I think the pellets will continue.
Yes, sir. Rajesh, sir, to come to you now, because we were discussing about these high-grade pellets and high-grade iron ore, and of course, with the green steel waves now sweeping the industry, of course, demand is likely to go higher. So, of course, beneficiation. So, one of the main things that we've been talking about is beneficiation. Of course, beneficiation involves additional costs. And also, to talk about, in terms of sustainability, maybe beneficiation also adds to the carbon footprint of the steelmaker a little bit. So,
No, it doesn't.
okay, sir. So, could you kindly explain on that?
So
Yes.
I'm surprised that this question is even raised. When you beneficiate, you're reducing the silica alumina content in the ore, you're increasing the Fe. Therefore, you're upgrading the ore and reducing the coke input into the blast furnace or gas input into the DRI unit. So beneficiation will reduce the carbon footprint directly for the steelmaker, number one. When you're beneficiating, you are using more iron ore, which is currently wasteful. I was talking about China, when they are using 35% ore to beneficiate. It's not ore, but they have BHJ, banded hematite jade. In India, we have abundance of banded hematite quartz. It's being lying waste dump because less than 45 is not considered as iron ore in India, whereas they are mining, I think, around 400 million tons, producing 150 million tons, roughly, I'm giving figures, of iron ore into that. Okay, so now that is reducing their mining land, so it is increasing the sustainability. So beneficiation will increase the sustainability. I'm really confused about why anybody would say that it is increasing the carbon footprint. It will reduce the carbon footprint. You are reducing the bad material out of the input earlier, so at the steel making stage it is lesser dirty or lesser carbon footprint. That's one point. Secondly, going forward, beneficiation, I know it's at cost. When we talk about iron ore and pellet balance, we keep talking China, but what about India? This quarter and this year, India will be importing around 4 to 5 million tons of iron ore after 3 years. Yeah, not high grade. 62-61% is being imported in the East Coast, in the West Coast by JSW, and I think around 5 or 6 shiploads will be imported higher grade, concentrated into the East Coast by ArcelorMittal. Yeah. Why is that happening? Because there is a misbalance starting to happen. If we talk about 130 million tons of steel production in India, that will require around 250 million tons of iron ore consumption in India. This 250 million tons will be consumed, plus pellet exports will happen, iron ore exports will happen, scrap import will happen, some iron ore import will happen. So you are, and according to me, all steelman figures I can share with Mr. Jha later. But if you look at the balance of iron ore itself, I am seeing a very tight situation in India itself. Okay, so the one reason why pellet exports is reducing is because the iron ore fines are not becoming viable to export. So because iron ore fines pricing going up and pellet pricing is not going up within India. So with all this, the balance of material changes within India also. So we'll have to keep an eye on that. Also in terms of why pellet exports are reducing. Capacity idleness is there. But for the people in the port, it is sometimes better for them to keep the capacity idle rather than buy iron ore and then sell it back into the middle of the country where the steel consumptions are. Because freight from the coastal plants to the consuming plants is $15, $10, and they don't want to spend that because but then the unviability happens. So that's something that a balance has to be studied more carefully, and I would recommend to steelmen to make a report of 3-year, 5-year projection of the Indian steel market. of the Indian steel market, of the Indian metallic market, to understand this thought process in a very deeper way. Coming to higher grade pellet export, I totally agree with Mr. Agarwal that to achieve the real DR grade requirement of the Middle East with the current iron ore without beneficiation is not possible. Okay, we have one of the richest iron ore, apart from NMDC, one of the richest mines that right now we are producing 65-66% pellet from our associates plant. We are calling this LMEL Pel, LMEL ka LMEL, and then pellets. 65-66%. It is going to the DR market. We have exported to Kenya, which is a DR market, but coal-based DRI. All over the West Coast, we are able to sell this, and we are selling to the blast furnace market internationally. To the real gas-based DRI plants, we haven't been able to sell this, though it's one of the best iron or best pellets, apart from Abhishek's one of the best pellets from India. But it's difficult to export to the DR market. So that grade you can only get with beneficiation. Very low silica. Why does the DR market require lower grade if you go one step further? Because they're using all that in the arc furnace without the help of liquid metal. So they need lowest gang possible to reduce their energy there. And or number one. Number two, also why it's more difficult and why those companies are not accepting any variation in quality, because like you said, Vale is in excess production right now, or in good situation to supply the pellets. So with all that, DR grade pellet is not going to happen tomorrow, but it will happen over a period. Or the DR market in India will go back again. There will be no single DRI expansion in steel making, in spite of all the green talk. Nobody really talking of DR market, DRI grade DRI plants, gas-based DRI plants. Blast furnaces still are being talked about and are being commenced. A lot of EC applications are waiting for blast furnace. So DRI India mein kab aayega? I think that is a lot dependent on the GAIL and the government policy on gas. There's going to be no subsidies for gas, that's for sure. I think nobody is expecting that. So one has to compare gas versus blast furnace versus coking coal versus steam coal for DRI and work out a scenario.
Yes, sir. So, of course, this DRI thing and the transition pathway for the DRI industry in India, it's a very interesting topic. But one more very interesting point that you, sir, you made, I would like to discuss a little more in detail on that. It's on India's iron ore imports, and that too not of a very high grade, but happening. I mean, both for steel makers in the western part of the country, steel makers in the eastern part. Do you see this as a structural kind of a thing? I mean, do you see this as a structural thing? Is it going to happen, or this is just a one-off thing that has happened? I mean, what is your view on this?
If somebody is importing iron ore at a price higher than what is available to them in India, landed in that plant, it is, I won't say it's a structural change right now, but it is a surprise change. And somebody would have to keep a track, and that's where the analysts come in. We are poor miners and poor steel makers. We don't have the bandwidth to understand why this happened. But that's where you guys come in.
Yes. Shobit, sir, your take on that? I mean, India's iron ore imports, and how do you see the trend going forward?
Yeah, I totally agree with Rajesh ji. I mean, sometimes doesn't make any sense to us as well. Why would somebody buy an imported iron ore at a higher cost as compared to the domestic market where they can get it at a lower cost? But at the same time, we have to see that all these imports are primarily being done by those plants who are at the coast. And in turn, they are benefiting it, and again, going forward in that. So there was a time, I think a year or year and a half back, wherein people were expecting India to import iron ore in a much more higher volumes. But then I think that scenario changed, and I don't see that seeing so much of iron ore availability with ourselves. There would be a very big jump or in the volumes of the import, except with the coastal guys.
But I think in the postal, I would disagree. In the coastal areas, overall, I think Indian balance, the market is quite well balanced right now.
Right.
Iron ore demand versus local versus export, local versus steel consumption local. I think going forward, steel consumption is will grow at a faster pace than
Of course.
iron ore production because for various reasons. And I think again I request Steelman to look at the scenario after 3 years with 170 million, 180 million, 200 million tons production of steel. Where is the iron ore coming from within India?
I would also add, I think logistics wise, today, we are facing the challenges, at the pace which probably the demand is growing, the infrastructure is not coming up, of course, ports, railways, by road. So hopefully, with the government kicking in, they can speed up the pace and, they can start matching because infrastructure is quite relevant when it comes to making, from 130 to 20 million production as well. That is one big factor as well, I would say.
Just to add up, even in the exports as well today, since we have been doing it since so many years, but still the infra is far away from what we require that to be and the capacity of the same. So that would again, yeah.
One more factor plays very heavily on the iron ore supplies within India is the very high premiums. 120% premium जब आप बोलते हैं, then obviously nobody is going to sell that iron ore, cannot sell. Yeah, but also many times I think people have forced to not produce the higher grades iron ore because they cannot afford the premiums to be paid to the government. So all those factors in, and that may be mitigated by different regime of royalties to be levied. But all those things will play very heavily going forward on how to balance the markets, and any exports would come after that balancing. So when earlier imports were happening was because of the Shah Commission and the Karnataka and the total mine closures. That scenario hopefully will not happen. But I think I'm seeing a different supply demand balance in iron ore going forward.
Yes, very interesting point on the overall picture. Abhishek sir, to come to you now with a question specifically on Godavari. So you have given a production guidance for pellets of 2.6 million tons for this fiscal.
Correct.
So could you elaborate on on the production of high grade pellets, and how are you trying to raise production of high grade pellets?
No, see, so I've mentioned it before as well. A ratio of high grade low grade remains the same, as in not low grade, 63 and 66 remain the same. It is 65, which is high grade, 35% is low grade. This will continue because we are close to our max capacity because the current capacity is 2.7 million tons, so we are operating at 95% levels. And with the new expansion coming in, that will be totally producing high grade pellets. So then going forward, my ratio will change of high grade and low grade. But at the moment, for the next couple of years, the ratio remains the same, 65 and 35.
65 and 35.
Right, correct.
Yes, Indranath, any questions?
Yeah, a very quick question to Rajesh sir. Sir, we have seen that the iron ore concentrate is also exporting from India. So any view on this?
I was not aware of this because there will be duty payable on that, right?
Yeah.
So I'm not aware of any iron ore concentrate going out from India. I think KIOCL is doing tolling of, or was doing tolling of iron ore concentrate converting into pellets. And I've already included that in the import figure. But is anybody exporting concentrate, Mr. Bagadia?
I join your view on that. I mean, I don't see much of that coming, and I've also haven't heard a lot of it.
The export duty of what, 25%?
Yeah, probably that there must be, because I heard that some people were trying to mix it up with the fines, but not fully going up the whole vessel, primarily of the concentrate.
So I know
One big source of iron ore export would be the Goa dumps. That would be
Sorry?
something which would be, so that Goa dump, there's no market for that in India. There's
Yeah, right.
on paper 700 million tons.
Right.
Maybe
right,
the concentrate can be mixed on that. I don't know the legal scenario of that. I'm not in the iron ore export business, trading business, but that may be one scenario that one can look at.
Yeah. So before closing this, I would like to ask each and everyone that what you are seeing the iron ore and pellet outlook in the first quarter of FY24. FY24. Q1 in the next Jan to March.
See,
Rajesh?
Rajesh, please start.
Yeah, Abhishek sir, you can. Yes, sir.
Okay. So, with the coming up of a new fiscal, calendar year, January to, H1/24, I think China looks good, at least about news coming out and the current trends. So, plus Indian production is going up, all the new capacity which people started making 2 or 3 years back, slowly started coming into the picture. For example, Chhattisgarh itself, I think in next 12 months, will add about 3 million tons of sponge iron. So with that, you need another 4.5 million tons of, either lumps or pellets. So, currently there is overcapacity of pellets, but I think with the capacity of sponge iron and blast furnace being added up, the gap should reduce, and the balance will still be exported, if iron ore is definitely. It's all about pricing. If you're getting a better domestic price, everyone's happy to sell domestic. But then not, then of course export is always an option. So we have to keep a check, the situation can change very quickly.
And any outlook for prices, sir, in the first quarter?
Yeah, I think the iron ore stays above 110, 115 levels. I think we are good. See, it's 6 months is a big cycle, 10 to 80 also. But with all the reports coming in, I think it should be around 115 and 20 levels in the longer term.
Okay, thank you.
Yeah.
Sorry, can you repeat, Abhishek?
I think with the with all the news and with all whatever views are coming in by a big analyst, everybody's saying the demand is robust and the prices should sustain at $115, $120 of 62 index.
Reduction from now.
Like $10 is not a big reduction, right? It jumped from 100 to 135 as well. But demand is robust, definitely. Thank you.
Yeah. Any comment on this, Rajesh sir?
I would not even think of commenting on pricing going forward. As far as I am concerned, I would sell at every price level to every market that we are in. Demand is robust. If you January, June is always better quarter, better half year than the second half of the year. And compared to last year, I'm seeing at least $15-20 better than last year's price levels internationally, and around 500 rupees better in the local market. But this is a very hazardous guess, but because you have to keep with the market requirement and the customer's requirement all the time. The margins of the steel players will be squeezed in this to some extent.
So any, in terms of volumes, if you can predict something in the next quarter?
Sir, I told you are the analyst. I am a steel maker and an iron ore maker.
Not an issue, sir. Sobhi sir, if you can.
As Rajesh sir rightly said, it is very hard, or it would be wrong to say the price, what that be, but I can just share that we are a bit bearish when it comes to pricing of the Chinese market. We are expecting some correction, good correction, going forward around January, end of February month. Seeing the scenarios right now coming up from the Chinese market with respect to either situation of the steel mills or the situation of the property market. Of course, the Chinese government is trying their best to stimulate the economy and especially the sector. But the kind of, I would say, data we are getting out of the charts, we are a bit cautious about it.
Thank you,
At
sir.
least in the short term. Yeah.
Thank you, sir. For closing remarks, I would like to handle Nirmalya to take over.
Yeah, thank you, Indranath. And that was indeed an interesting session, a very enlightening session. And Steelmint would like to convey its heartfelt gratitude to the respected panelists for sharing their invaluable insights. A big thank you to the audience too for joining in. We look forward to more such interesting sessions, of course, in the future. Before we draw the curtain, I would like to once again thank the panelists for their support, for their insights, for their encouragement. Thank you all. Thank you very much.
Thank you.
Thank you. Thank you so much.
Thank you so much.